Nothing gets under my skin more than this. It's hearing someone talk about their comp plan, how much money they make per transaction. Look, comp plans matter, but you know what matters more? How much money do you make each year, not each transaction? How much money do you actually take home in terms of net pay, not gross pay? At the end of the day, whether you're a real estate agent, a mortgage broker, a loan originator, heck, you may even sell life insurance. What matters most is how much money do you make per year doing the things that you love to do and that you're good at within the 40 to 50 hours a week that you're willing to work. In today's episode, JC and I are going to discuss LO compensation, mortgage broker compensation, and we'll even give you some ways that you can legally and ethically deduct certain expenses from your compensation so that you do lower your taxable income. But it's a matter of focusing on what matters, and what matters most is how much money you make at the end of the year, not how much money you make per transaction. Check this out. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Yo, what's poppin'?
JC, it's you and I back in the saddle again, along with our producer extraordinaire. We call her Special K, but the people at home call her Karina Mojica. What's up, Special K?
Hello, what's up? Hey.
Special K? I think the kids call it Tusi now.
Do they really?
Yeah, just look that up.
Well,
Google it from
I think
work.
you said this joke already.
It's not a joke if it's real life, Karina.
Wow, don't nobody listen, but shout out to you for remembering though.
Yes. Yeah. For those playing along at home, yes, Special K was a drug of choice back in the 90s.
Still is for some people.
Yeah, but they don't call it Special K anymore. They call it Tusi. What is it? Is it more like a psychedelic? Is it more like speed?
It can be whatever you want it to be, Dustin.
But it's ketamine, right? It's not what the K was?
I don't know what the hell's in it.
But you like it?
Dry Pepto-Bismol? I've never dabbled, but I heard from a friend from a buddy.
Okay.
Yeah. Drake told me once.
It's Drake told you once?
Yeah.
Was that when you were hanging out at the Raptors game?
Nah, man. I think it was a lyric to one of his songs.
Are you following any of this NBA basketball right now?
Women's college basketball is over, so now I had to go back to men's professional basketball, unfortunately. So I saw the Magic one.
They punched Detroit right in the mouth. At least game one. By the time this airs, who knows?
By the time this airs, yeah, shit, they'll be swept. So
yeah, I don't know. I think the Magic, and I'm not a huge NBA fan, I think they found their dog. I think they had to fight so hard after an underwhelming season to get into the playoffs that I don't know. But nonetheless, let me ask you this. It's been a minute since you've been in the studio to hang out with us.
Yeah.
The OG fans are happy to see you. The new fans, let me introduce. This is the co-founder of T-Lopp, the original business partner to Dustin Owen, the one and only John Coleman, a.k.a. JC.
How many new fans, huh?
Yes, dude. We're at 30,000
It's a
on
war
YouTube.
Of attrition.
Hey,
Whatever
then I'm
that
winning
means.
it.
What?
Do you even know what that means?
No.
We are endurance athletes around here, John.
It is. I could tell you are, yes.
I mean, look, even you run. Heck, you're working out with a weighted vest.
I dabble, yeah, you know.
Yes.
It's that dad bod I'm working on.
Yeah, there you go. Yeah, you're doing a good job. You're doing a good job. No, you and I are going to jump into a topic today that is, look, I'm going to get fiery, which you probably only know me that way. Wow. Yeah, wow, there's a first. But, dude, I'm just sick and tired of talking to originators and all they care about is their comp. And I'm like, bro, you need to worry about like referral sources, generating leads, like actually being successful.
But they're worried about like probably feeding their families and just living their life. So I hear what you're saying, but I just need to make a paycheck. So bump all that, Dustin.
That's what I want to talk about, John. I want to teach them how to make a paycheck. And it's a matter of like of putting the priorities in line. And we're going to get into it that I want to teach people how to make the most money doing what they like to do in the least amount of hours.
Oh, like a Tony Robbins seminar, like a TED Talk.
Like John Coleman's life, right? How does John make the most amount of money in the least amount of hours doing what he loves to do?
I think that's a universal roll of the die, and it comes and wins. So All
right. Well, we're gonna jump into that, but first we need to take a quick pause so we can hear from today's show sponsor. Y'all, something big is happening at Lower Mortgage. And if you're paying attention to this industry, you've probably noticed. In just the last month alone, Lower has added some serious horsepower. We're talking top producers representing over $350 million in volume. These aren't rookies kicking tires. These are heavy hitters who've done their homework and made the move. That should tell you something. On top of that, Lower just acquired Movoto, a top 5 real estate portal with over 150 visitors just last year. Before that, they brought in Neat Labs, and now they're launching Lower OS, a next-gen mortgage platform that's cutting loan delivery times down to 10 days. This isn't a company standing still. Lower doubled their volume last year, and they're projecting another 40 to 50% growth this year. The best in the business are taking notice, and they're voting with their feet. Here's the reality. The companies that are going to win in this market are the ones investing in technology, building real infrastructure, and competing at scale. Lower is doing all of that. They're going head to head with the Rockets of the world, and they're built for originators, not against them. If you're a producer who wants to be a part of something that's actually going somewhere, not just surviving, but growing, this is the moment. Lower Mortgage, the momentum is real. All right, so we're back. Damn. And we are going to jump into this, but
Yeah, you've missed a lot.
Oh, that's cool. That's a little setup, man. It's like a proud dad. Like, oh, when I left you, you fucking drooling on yourself, and now like you can walk and throw a football. It's like I'm proud of y'all, man. It's so nice.
Yeah, right. Yeah, welcome back.
Yeah.
Welcome back.
Next time I'm gonna have a beer and smoke in here, but I didn't want to like offend
I don't think you're allowed to smoke in here for the landlord.
It's
You
a
can
vape.
drink all you want.
It's a vape.
You can vape. Yeah.
Right.
Does it a good smelling vape or does it smell like weed?
Smells I mean, yes.
To both.
But does it smell good? And
He's
does it
thinking
smell
about the
like
other
weed?
vapes.
Yeah.
Nobody smoking that bubblegum
Right.
smelling bullshit.
Okay. Very, very cool. Well,
Okay.
you're not going to hurt my feelings one bit. I would just like to see you in here more often. I'd love to get me some JC
Paige,
at least.
you know what I'm saying?
I would love you once a week, but I would settle for twice a month.
This totally ladders up into like compensation.
We're working on that. Hey, we got your paycheck a month ago.
Hey, that's what I'm saying. It's totally about compensation. So what are we going to lie to the people first about today, Dustin? What
We're
are we
going to lie to them.
talk?
Hey, quick question, real question. Put you on the spot.
Okay.
Are you going to be on the cruise ship with us in September?
I just hollered at Steven and I was waiting for that payment link to come through because I thought like T-Lopp staff were going to be like accommodated for it. And he said you were. And I was like, cool, send me the link so then I can upgrade to the double balcony.
Double balcony.
Yeah, I'll take care of that. I just want to see this. I want the spiral staircase.
Oh, wow. You're bougie
Super
for
fancy.
real.
I mean, but if I can get halfway to first class through T-Lop, then I don't mind spending the extra half.
That's
you know?
true.
Yeah. And for those that don't know, we are doing the coolest event the mortgage industry has ever seen.
Pew, pew, pew.
It is. It
is cool. It's
look,
gonna be dope.
I've gone to conferences for 20 years. For 20 years I go to the conference, I don't sit through all of the speakers.
No.
And dude, I am a speaker at conferences.
I know.
I go there because from 4 p.m. to 11 p.m. is where the magic happens. So let's do an event that's all about the magic happening. So let's make it about networking and masterminding and breakouts. Sure, we'll do one day of a sales conference, one day where me and 5 of my coaches will be teaching and speaking and presenting. John, you and I will even do a podcast on that one day on the main stage.
Snapped.
Where look, you can have your little daiquiris and your fruity drinks while we podcast. The audience will be a part of the podcast episode because they'll be asking us questions. But then the rest of the time is going to be a beach bash, and it's going to be an evening event. It's going to be a sail away event, all about the mixers and the parties and the networking, and less about 3 days of just speaker after speaker just talking at you. Exactly. So September 14th through 18th, right, Karina?
Yes.
I got that right.
Right.
I've effed it up on several episodes. All of the information's on our website, tlopponline.com. There are only 100 cabins. And more specifically, here's what's really cool. We have companies right now booking 10 rooms at a time. They're using this as their President's Club. They're using this to do team building events. I even have an entire division that booked 5 cabins for recruits. Right? So recruits are going to be on this. It's just a great way for mortgage professionals to get together, spend 4 days together. It'll be a little bit of a boondoggle. Look, for the Mike Smalleys of the world, we do have Wi-Fi. You can spend all day Tuesday in your cabin, working your files, doing your TBD calls. The rest of the crew may be in Nassau, is spending a day in the Bahamas, right? But check it out, tlopponline.com. It's called the Unite event. It's a Caribbean takeover. You won't want to miss being a part of this, what's going to be annual event. So we're going to talk about comp. All right.
What are they complaining about now, Dustin? They're not getting paid enough?
It's not even a complaint, and I think I'm the one complaining.
Okay.
So I want to turn this into a learning lesson. Maybe it's a little bit of me getting up on one of my soapboxes like I like to do. Yes. And it's this. I get to talk to a lot of originators because of this show that you and I built 6 years ago that they represent the future of mortgage lending. They are just now getting started. I also talk to a lot of originators like me who've been at it for 20 years, who have funded thousands of loans, who are top producers, and they're looking to make career changes, and they're trying to make the career change based on like a small, minute detail within the comp plan.
Mm-hmm.
And my issue isn't somebody wanting to make the most money, because that's what we coach people to do. My issue is I think they're blinded, or I think that they don't have all of the facts. I guess the word you would use is they're probably ignorant to it.
Mm-hmm.
And let's shed some light on it. Like let's shed some light on when someone says, I'm going to go work at this place because they paid the most basis points. What does that typically look like? So what people 9 times out of 10 don't understand, that if you're going somewhere that's going to pay the most basis points per loan, you're also giving something up. Like, what are you giving up? You probably don't have a marketing system. You probably have to pay for your own credit reports. You probably have to pay for your own LOS. You might not have much of a sales culture. You might not even have much of sales leadership in general, right? There's a trade-off in life. We kind of, what did our moms say to us growing up? I don't know if your mom said this. You can't have your cake and eat it too.
Yeah, I totally ignored that shit.
You
I've tried to live my life. As a matter of fact, I don't even eat cake, but give me some of yours and some of those fucking mac and cheese.
Yeah. Yeah, but like there's a reason why that saying exists. Like if you want the most comp, you're going to give something up for it.
But hold on. So right now, aren't we in a climate where there's new loan originators who haven't been in the game, so they're just going to work for whoever takes them. Then there's kind of like seasoned vets who kind of might hear what you're saying, but instead of working hard, they're just going to be seduced by the $30,000 to $100,000 sign-on bonus that XYZ mortgage company gave them. They're going to leapfrog over there, stay there for the next 3 years so they don't have to pay it back. And as soon as 3 years and 1 day hits, they'll be on to their next mortgage company, rinse and repeat.
You've been around the block once or twice, haven't you?
It's just the same everywhere. It's hilarious how like when you work for one mortgage company for 5 years and then work for another mortgage company for another 4 years and aren't a loan originator, how much is exactly the same.
Yes, 100%. 100%. And now you brought up a topic that I didn't even come prepared to talk about. And if we have time, we'll slide it in. And that's people choosing an employer based on the transition package being dangled, not what's best for them the next 3, 5, or 7 years. And I think that's the point of what I'm trying to say is quit playing the game of chess, play the game of checkers, think outside of what's in front of your face and think about the next 12, 18, or even 36 months and how it impacts it.
Yeah.
So we'll start here. We have a lot of younger originators. You are correct, John. Look, when someone asks me, and I'm going to do a whole separate episode later about choosing the right employer, also as an employer, how to attract the right talent. But when you're choosing an employer, I will tell people it's not about the company. It's not about broker versus banker, call center versus credit union. It's not. When you're a newer originator, what matters most is that you find the best local leader who will also be a mentor, who has systems and processes that you can tie into. And more specifically, there are people in that organization that are doing what you want to do for a living. Like that's what matters. It doesn't matter whether they pay you 40 basis points or 240 basis points. It matters, am I going to learn how to operate like a professional? Then I always use my dad as an example because he was an electrician, right? Your dad was in education. No matter where you start, like your dad in education probably had to start as an intern working for free. Mm-hmm. Then he became a teacher, then maybe a principal, then maybe he became the superintendent, right? He didn't roll out of grad school as a superintendent. My dad as an electrician didn't at 19 years old like become a master electrician. No, he started as an apprentice, then he was a journeyman, then he was a master electrician. Mm-hmm. What mattered to him is that he worked for a company that gave him an opportunity to come to work every day, learn a skill set, be mentored, and then gave him the opportunity to rise the ranks.
Absolutely.
Your dad was given the same exact thing.
Correct, but now all we feed people is instant gratification, and that's why we parade people on stages and have podcasts and put mics in front of their faces because, yes, I did just start loan originating last year, but you know what? I closed $600 million on my own by my 7th month, and here's how I did it.
Well, wait a minute. If you did that, I 100% will put you on stage, and I 100% will have you on the show. right? Because you have something we can learn from.
Right.
Now, if you're a slapdick, as we like to call them,
Yeah.
and you haven't done and you want to talk, I don't want to hear you.
Right.
I only want to listen to people who've actually done. Right. It's why I'm proud of our coaching company, because everyone who coaches has actually done and they're still in the trenches. So when I'm talking to these younger originators, this is what I'm telling them. I mean, younger isn't younger in life, it's younger in experience. I'm saying that's what you're looking for. And when you go there, whether you're making 40 bips or 240 bips, look, 240 basis points when you only close 4 loans a year, okay, that if you were really making that type of money, you may make $24,000. But my problem is you don't know what you're doing if you've only closed 4 loans. Like you have to go out and close 10 loans just to like wear the name badge that says loan officer. Close 50 and you kind of know what you're doing. Close 100 and you're good. Close 200 and you're an expert. So you closing 4 loans early on in your career on your own with no support, no mentorship, making 240 basis points, you made 24 grand. Or you could close 60 loans for 40 million in your first year, but you only made 40 basis points. Well, 60 loans for 40 million at 40 basis points is $140,000 in income. Those 60 loans are now 60 transactions that you've gained experience with. It's 60 listing agents and buying agents, and it's 60 past clients that are now in your database. So this is what baffles me when somebody's making a career decision based on comp and comp alone. I can use an example where you can take the highest comp plan, close minimal loans, or the lowest comp plan and close a bunch of loans. The lowest comp plan paid you the most money, and now you're better because of it. So like that was probably point number 1 I was looking to make. Point number 2 is experienced originators. So that was more for like people younger in their career. Experienced originators are being lured to leave their company to go somewhere else. Maybe it's because they're going to give them a P&L model, which by the way, I love P&Ls. And it's P ampersand L, like profit and loss. It's funny. I was talking to someone earlier. It was our new chief of staff, and she was taking notes, and she sent me the notes, and she had a P, she had the letter N, and she had the L.
P&L.
Yeah, I just had to walk her through it real quick. But by the way, shout out to Rebecca. She's doing an amazing job. Super stoked to have her on the team. But if you're on a P&L, I tell people straight up, please understand it's profit and loss. So you can take a big fat L if you don't know what you're doing. However, you can pick up an extra 20 to 40 basis points on your annual production if you're any good at running a P&L. But I've seen originators make a move from one company to the next based on comp per loan and actually make less money per year. Because one company was a comp per loan, and they're like, well, I'm going to make 275 basis points. I'm like, well, you're not.
T-Lopp Unite is not your typical mortgage event. This is the first ever T-Lopp cruise experience built exclusively for originators. And for 4 days, it's not about the speakers, it's about you. We're talking breakout strategy sessions, real conversations, curated events, and uninterrupted access to a community that helps you grow. If you're serious about taking your career to the next level, this is where you need to be. Space is limited and the price is right. So click the link now and learn more.
And like, what do you mean? I said, well, you're going to pay an $8.95 per file fee. You're going to pay an 11% of your comp fee for accounting. You have to pay for your own credit reports. You have to pay for your own LOS. When you start subtracting all of those expenses from what you actually made, now you may make 148 or 178 basis points, which may have been more than 125 that you came from. However, I'm then going to have to ask you, in that setup, can you still market more, market better, generate more leads, create more referral sources, fund more units, and close more volume?
So if I understand this right, you can work for a mortgage company A, where basically you work in the basement with no AC, there's roaches everywhere, but you get paid the most. Or you go work for a company B that has free coffee, super speed Wi-Fi, free shuttles everywhere, but doesn't pay you shit.
Yeah, 100%. And honestly, to me, it doesn't matter. I want people to know the facts. I want to know the truth and choose what's best for them and what helps them sleep best at night. But the facts are, when I study people in our industry, which that's my job, it's what we do, it's what I've been doing for 20 years, and I even look at my career, I always worked in a place where I could have the most relationships, generate the most leads, fund the most loans, and make the most money per year, not per transaction.
question for you, playing devil's advocate, since you've been on the other side in terms of like running a mortgage operation, how does this look, and what's the mind of someone that the corporation or the mortgage entity itself, like what game are they playing? Like explain it from like their point of view rather than just the loan originator being like making, all these leapfrog decisions.
Well, so if I'm an employer and I want to go in an environment where maybe I'm going to 1099 my employees, I'm going to give them the most comp per transaction. I mean, honestly, as an employer, that may be, if I open my own mortgage company, John, exactly what I would do. Now, I would try to offer more support than my competitors who are also running that same model. But the employer is looking at it this way. I put you on 1099, so now I remove a lot of my overhead as well as maybe some risk. If I start deducting you or making you pay for credit reports in your own LOS, that's less overhead on my end. I'm paying you high comp, so I don't have to support you because that's the trade-off. So all of a sudden, I'm just providing you a place to come work. I'm providing you with a most basic structure. And in return, if you're super entrepreneurial, you're super resourceful, you want to do things on your own, you want to do things your own way, I give you that environment, right? I handle the back office, investor relations, the basic compliance, but I'm not going above and beyond to coach you, to train you, to offer you systems and processes that you can tie into. But it works great for me because whether it's 25 or 40 basis points net that I'm trying to earn, I can still earn that with minimal overhead, which means minimal risk on my end. And if I get enough of you, then all I really care about is how much net revenue did my company earn that year. So it's a win for those people. If I did the exact opposite, it's like, look, I'm doing a quality play. The first play is more of a quantity. How do I get the most people into my system? And how can I generate my $3 billion in production, even if it means I need to have 3,000 loan officers, whereas someone else says I only have 300 loan officers, but all of my loan officers are full-time. They're all professional. They all follow. They use this one set system, this one set process. They lock their loans one way. They submit their loans to processing and underwriting one way. We fund them one way. And in return, I pick up a portion of their payroll taxes. I offer them a 401k match. They get short-term disability. They have an entire marketing department. They get certain access to tools, maybe at no cost or at a deep discount. And our sales leaders actually lead. And we do things like annual conferences and awards trips, right? There's people in that environment that the LOs love it because they only want to focus on 5 things. They want to leverage and create referral relationships. They want to consult and give advice to borrowers, app lock and disclose loans, and move on to the next, right? They don't want to mess around with compliance or IT or HR or payroll or compliance, and they want one system. They want one system to learn. They know that system inside and out, and then they build their own internal workflows to execute at a high level. To them, it's a volume game. How many loans can I pump out per year? Mm-hmm. Working my 30 to 40 hours a week, doing what I love to do, what I'm good at.
Are there some mortgage companies that are like helicopter parents that'll just hover over the LO and be super strict and be like, what are you doing? Or is it not that? I know it's very autonomous as a LO. Just
banks, credit unions, and call centers, which, by the way, certain people thrive in that environment.
They need those guardrails. Otherwise, I'd be off of them.
Yes, they need to clock in, clock out. Expect to be in at 8 o'clock. Mm-hmm. You work till 6. You have to ask to go to the bathroom. You have to submit PTO, right? Banks, credit unions, and call centers, which we call direct to consumer. And by the way, not all, right? Not all. I mean, if you're a bank or a credit union, you definitely have some autonomy that you're given to your salespeople, but probably not the same autonomy you get when you're a 1099 broker, which really means you're an independent contractor. Right. So, and then you're asking the question, why would basically a mortgage banker want to operate their model versus like a broker model that's 1099? I think for them, because they're making a much bigger play on a national stage, many of them are wanting to retain servicing. And I think there's just a certain level of culture and full-timeness that comes with it. And honestly, maybe in that environment, they think they can actually net more money per transaction than if they ran the other. So let's say model A was I can net 40 basis points on an annual basis, and I have less exposure, which means less risk because I have less overhead. Where someone else says, hey, look, I'm going to carry the overhead. I'm going to expose myself at a higher percentage. However, I think I can actually net 60 basis points instead of 40, and that's the end of the game. Now, right now, very few people are netting any profit, and if they are, it's like 25 basis points. Like when I look at the Mortgage Bankers Association, or if I were to call my girl Marina Walsh over at the NBA and get her latest data, she'd show me that in Q3 and Q4 2025, mortgage lenders on average netted 25 basis points. But if you look at it historically, they've netted 40 to 60. Now, there was COVID type years when they netted over 100. Let's just say 40 to 60 is typically what you're trying to net if you're a mortgage banker. But maybe if you're a broker, that number is closer to 40 basis points. So I think it's like anything in life, it's good with it's give and take.
So what would you say if I'm just an average loan originator, somewhere in the middle, not too hot, not too cold, just right, the Goldilocks zone? What type of shop should I look to originate in?
Yeah, and I think it's definitely one of those, it depends. And it depends on where you are in your career and what you're looking for. Early on in your career, your decisions need to be made based on who's the best mentor with the best sales culture, with the most access, who has systems and processes I can tie into. But once you go from mentee to mentor, maybe once you're the mentor, once you've already learned all that you can learn and you've adapted to their way of doing things, which is a best practice, at that standpoint, maybe it matters less. Like I have friends of mine in Atlanta, Georgia, shout out to Jasmine and Jeff. And I remember when they made that move, they worked for the company that I worked for, that we were all in, boutique, elite. I mean, you worked there, like, you know. But as an originator or branch manager, you probably weren't going to net the greatest amount of money. However, many people, they were going to net the most amount of money because they weren't ready to go out on their own. Well, my friends Jeff and Jasmine, after a certain point, I mean, they're doing $100 million a year. They're like, look, we don't need or want the marketing department. We don't need or want their CRM. We don't need or want the coaching they're offering. We don't need or want to go on their company events. What we need and want is the sharpest pricing with some autonomy and someone who can just get my loans closed. And they found a company that had slightly better pricing, that gave them more access to the gross profit, which meant they could net more. And they were totally fine and equipped to take on the marketing themselves, the CRM themselves, the deal structuring and the pipeline management all themselves. So I think, like, to answer your question, it depends on where you are. And there's some people, let's talk about this. I gave career advice. So something we opened up since you've been gone, cue little Kelly Clarkson for me, please. Is we're all in on this T-Lopp's career advisory, which you've seen me do it throughout the past 5-6 years, but now it's like a real legit service. We're running ads, and I talk to 3 originators a day who reach out to me for free advice. Well, this guy reaches out. He's easily in his 60s. He's 35 years into his career. He is with the #1 retail lender in America, like a company that I have no problem recruiting branches and LOs to because I think that they do an amazing job. However, where he is in his career, I don't think it makes sense for him to stay there anymore. I think this guy should be a mortgage broker. I think this guy should work out of his basement. I think this guy should cherry pick his loans, and I think he should broker them to UWM. I think he should make 225 basis points net. I think he should process his own loans, right? And I think he should navigate it because he's at a point where he's not getting after. He's not trying to do volume at a high scale or units at a high scale. He's on the back end of his career. It's the 4th quarter. He's up 2 scores. It's first and goal from the 10-yard line, and homeboy's taking a knee, right? That guy doesn't need all of the things today that he needed back in 2016 or even 2019. So I think for all of us, it depends. And I think that's why I love the mortgage industry. There is no one size fits all. And as we go through our careers, it may have made perfect sense for us to start at a call center. I just connected with this guy, started at a call center. His name is Oliver. Shout out to Oliver. Crushed it. And after about 15 years, he said, no longer for me. Now he's over at West Cap, and he is transitioned from being a call center LO to a self-generated purchase focused LO. I looked him up in Redder. He's doing 25, 30 million in personal production, right? So like we all have our journeys. One is not better than the other. It's a matter of what's best for us right now based on where we are in our career. But what's very important is that we don't choose an employer strictly over comp plans, especially when comp plans can be deceiving, because it truly matters that we go somewhere where we make the most money per year, not the most money per transaction. And people can get deceived in thinking they're getting a great comp plan, but when they look at the amount of time it takes to work in that system, the lack of resources, or the amount of out-of-pocket expenses, it might have been not what was best for them, but the exact opposite, what was worse for them in that situation. I think that was the message I was trying to get across.
If you're a licensed originator who's closing loans, but you're not consistent, this is for you. If you're brand new or just looking for motivation, trust me, this is not for you. Most LOs don't need more information. They need structure. They need proven processes and somebody to hold them accountable. T-Lopp's Originator Coaching gives you weekly live coaching, scripts top producers actually use, and step-by-step business systems you can implement immediately. Not someday, we're talking day one. You're not watching videos alone. You're executing in real time with other originators who take this seriously. Right now, you can try it free for 2 weeks. That's 2 full weeks for free. You'll sit in on live coaching calls. You'll get access to the frameworks and see exactly how top producers run their business. If it creates clarity, if it creates momentum, or even if it puts wins on the board, you keep going. If it doesn't, no worries, you can cancel. No pressure at all. Click the link, start the 2-week trial, and finally, build this like a business, not a side hustle.
Fascinating shit, Dustin.
Yeah? What are your thoughts? If you were a loan officer, John.
Come on, man.
If you were a loan officer.
I would leapfrog and find the path of least resistance with the best culture to let me skate by, doing as little as possible, using all of their resources until they wake up to it, kicking me out, rinse and repeat.
Okay, so what would you want to do? Of all the things you know loan officers have to do, what's the one thing you would want to do? Because that's the one thing that you like to do.
Getting smacked at the bar at corporate events.
Okay. How about getting smacked at the bar at business networking events?
Yeah, those two.
Right. There is a time and place for somebody to be a master networker where you come into the office with a name, a phone number, right, an email address in a certain scenario, and you 100% could hand that off. You wouldn't make 125 basis points. You may make 50, but you wouldn't care. If your job was golf course,
shit.
Okay.
I'm waiting for that. But just to be like an influencer, be like, oh, this is part of a recruiting department. He's John. He'll just be taking you out. Like, I would.
That does exist. It's business development.
Sounds like prostitution, but in a different kind of way.
No, prostitution. You're going out.
Like here, like have fun with John. John will take you out, show you a good time. What would you call that?
No, it wouldn't be John. It's John.
No, John wouldn't be showing.
John has to go out, have a good time with strangers.
Yes, like recruiting.
And then those strangers, through talking with you, are like, dude, can you hook me up with your branch manager? Can you hook me up with that loan officer? Because I need your service, or I need to come work for your company.
Yeah. What do you call that person? A liaison?
Business development. It's business development.
That's biz dev in 2026.
That's
Shout
biz
out to
dev.
biz dev.
Yes, that does exist. We found John a role in mortgage production.
What is that? CBV?
No, you just be biz dev.
BD.
Yeah.
CBD.
Okay.
Hold up. Yeah. I'm the Chief Business Development Officer, also known as CBD.
Yes, there you go.
Come on, I still got it. It
would be CBDO.
CBDO.
Yeah, CBDO. Chief Business Development Officer. Oh my God. Dude, we would have you hanging out with real estate investors, with realtors, with loan officers.
They love me. Oh my God.
All you have to do is every day come back to the office the next day with at least one lead, one referral.
Whoa.
You said you want to not get fired, right? And you want to make money. If you want to not get fired and you want to make money, you got to come back with at least one name, phone number, email address.
I'll let you take a quarter of a bip off my comp plan just to not come in with a lead. And I think...
I don't think that works then.
I think it will. But hey, ladies and gentlemen, it's been an honor and a privilege to be back here on the set of the Loan Officer Podcast. Listen, if you're new to the podcast, we thank you for listening. If this is your 300th time tuning in, again, we thank you. John's excited to be here, and I'm sure you're excited to see John. Listen, don't forget about all the plethora of products we offer. If you're questioning about what you're doing in your career, just head over to TLOPonline.com. We have career services. We have some other widgets that we put in there, and it's a whole new looking vibe, so make sure you go check it out. If you're not signed up for the newsletter, please sign up for the newsletter. I write that shit like every week. AI doesn't. You can find that over like on TLOPonline.com. Please give us a like. Please give us a follow. We're on Instagram, YouTube, TikTok, LinkedIn. Please follow our channels. If you haven't heard about the cruise, which I've already talked about, please head over to the website. And guess what? We have a website, if you didn't know. It's called tloponline.com. Please head over there and have a go. I'm John Coleman. He's Dustin Owen. She is Special K, Karina Mojica. That's all the time we have for you today, but we look forward to catching you on the next episode. Peace.